The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Friday edition, December the 21st. 21st? Yep, December the 21st. I only typed it about 10 times today. And it's my pleasure to be here Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock till noon. And what's very important about today, what is important about today? Well, we're going to discuss it in terms of the ChapmanWave today. Of course, Friday is usually where we get a little bit more in detail, a little close-up look at the ChapmanWave, kind of little lessons there, giving you a concept and then an application of what we do in the ChapmanWave, why certain peaks are so important, if certain technicals are starting to change. So let's go through the numbers. Oh, first of all, 2 great hours. Steve Rhodes and Tom O'Brien, Steve together, and you've got Daryl Martin. Daryl comes on back again at about 1 o'clock, straight after Nico Dahan, health program, just fabulous health program, 12 o'clock till noon. And then you get, so Dave White comes on after Daryl, then you get Ken Shreve, and back to home base, Tom O'Brien, wrapping up the week, looking at giving you different perspectives on what he's looking at, and just great knowledge and acumen in terms of market activity. So what we're going to do right now is I'm showing a chart. If you're looking at Tiger One, and I know that we have a lot of new people that have started looking at the Tiger.mobi or Tiger through the front page of TFNN, where you can just click on and get right to the site, and you can see these charts live. What I'm looking at right now is the Dow, and there's a very simple concept, and one of the reasons why in my opening call, that's my daily service, a very intensive daily service that you can go through the different chart patterns, the different formations. I explain what we're looking at. I explain why we're doing what we're doing, why I got very cautious over the last couple of days when so many of the stocks that we were long 6 stocks. We took profits in Apple yesterday. We bought it at the low based on the ChapmanWave methodology, and we were lucky. We went in just under 507, got out at 519, and Apple is now trading at about 514. Went down to 511 earlier on. Looks like it's one of those H patterns again. I would not be surprised if it goes back on my bounce list very soon, but not right now. And one of the aspects that I'm looking at here is the Dow chart that I'm showing. Dow Jones Industrial Average shows from the low of 12,471 on the 16th of November, there were 6 peaks made. The objective of the ChapmanWave is to identify the lowest low bar, and from there, if the chart pattern and the technicals are confirming, not only do you get a buy signal, but the buy signal should be upgraded quite quickly to a buy mode. If it goes to a buy mode, the implication immediately in the ChapmanWave is if you have technical indications that say it should go to a buy mode, it means you're really saying, I am extending my look out. It's a forward-looking indicator, very unique indicator. In fact, it's not just unique means very special, sometimes one of a kind. This is, in fact, unique because it is one of a kind. It essentially grades each successively higher peak. The objective is get you from the low bar to at least a peak D. At peak D, other things can happen. That's where you want your Sears and Roebuck, but definitely not Sears Holdings, which is just a disgraceful stock, considering the name of Sears. So I won't get there. But you want your Sears and Roebuck toolbox with all those tools that you need right at that moment that it's critical. And the critical moment is, in the ChapmanWave, to be able to use something like the maroon line here, the 9-period exponential moving average, or just the ChapmanWave left side, right side price time match of 13,290, going back to the Grand Canyon slide that was in force on the 23rd of October of 2012, but it's the highs after that I counted at 13,290. Well, what happened is if you give the low bar of the 16th of November, you go from that left side of October the 23rd to the right side. Where do you come out? You come out right on the 11th of December. That's an exact left side to right side price time match. Within that, you've got a uptrending diagonal line, which I call the inside wedge target line, and it went exactly to the day. It spiked above that level. It went to 13,329. Peak E. Peak D was much lower down, and it continued. It was a very exciting moment because it continued higher within one bar. Then it pulls back from peak E at 13,329. Objective hit. The rest is just a code. It's an extension to the move that you were looking at. Pulls back, holds the 9-period moving average, has that big spike. Optimism. Boy, optimism. I don't believe there's optimism. How can you have optimism when politicians are involved? Anyway, optimism that there's going to be a deal. Goes to 13,365 on the 18th. That's leg E, leg F. At a peak F, it is so critical that most of the time, what I'm looking at when there's a peak F is that I'm looking at the technicals, the MACD and stochastic and other indicators. If they are starting to fail, what will happen is that you will get not just a pullback, but a very sharp pullback. Now, in my CD introducing the ChapmanWave methodology, look at this. Here's an example. This is slide 11. This is right in the beginning. I show. What does the ChapmanWave trademark notation look like? What does it do? How can it help in trading? Well, here's a blank chart. They're not even candles. They are just bars. This is a Dow chart, and it shows you that if you put the letters in, all of a sudden, you've got the prerequisite, which is to get you to a peak D. Then there could be a pullback, and then there could be a brand new buy mode. Look what happened to this particular chart. You go from the low bar, you go peak A, B, C, D, pulls back. That's the sharpest pullback it had from peak D. Starts a brand new buy mode, goes to A, B, C, D. And as the song goes, the wave goes to C and then to D. That's when it flashes a cautionary light. And all you got to do is make your stops real tight. And then suddenly it goes to E and F. It happens so often. E, F, higher highs. And that's where you've got to be real careful, because if there is a pullback from that level, that pullback could be really sharp, a sharp cascade to the downside. What does that mean in real terms? I'll tell you what it means. Have a look at this chart right here. Let me go to the black chart. Let me go to the Dow, INDU. And look, in 2007, the Dow went to where? It went to a peak F, a doji high, peak F, October 2007 at 14,198. Well, it hits that level, and what happens? A sharp cascade all the way down to 64.69 March of 2009. So we put that into context, and now we're in leg F. There is a possibility that we're making, peak F/E. A peak F/B. We don't know yet whether or not this is going to be as serious a peak F as the others. So we have levels to watch. But I'm not interested in the monthly right now because the month hasn't concluded. I will have that my subscribers will know exactly what to look for at the end of the month for a potential similar peak F major top. But at this point, the technicals are still pretty darn good, even in the daily. Now let's go back to what we're looking at. We're looking at in the Dow, INDU. I'm doing it on the white background chart. Whoops. Dollar INDU. We went where? Why did my subscribers know that I very specifically said I'm going to set up a 200% short position a few days ago at the opening of the market, because at this particular level, all the signs are saying Dow could be at peak F at 13,365. That was on the 18th. There was a very good chance that if it recycled higher, it would have done it very quickly. It would have actually done it by either yesterday or today. The MACD is still quite good, and stochastic, though, is at 81%, starting to pull back. Now, what I've done here is I've drawn in the on-balance volume, peak A, peak C, peak D. I couldn't quite get to D because I don't have room, but it made a peak D, and it made the peak D earlier. It made it just before peak E. That's a heads-up to me to say the way I read volume is on-balance volume, Joe Granville's on-balance volume, and to me, it's saying be careful. You don't have to, just be terrified and get out of all your longs. Raise the stops to a point where you think at least you're making a profit, not as much as you're making a few days ago, but the weekly charts were still good enough to be able to try to hold these stocks. Let the market now tell you. Within that context, we have incredible insurance by the DXD 200% short. Peak F. Now, I believe, I'm just going to do this quickly. I believe gold, the GLD, made a peak. Yeah, gold made a peak F top at 174.07 back on the 4th of October. And the technicals were failing. You see what I mean by technicals? Look how the MACD and the stochastic were failing terribly. And that says, watch out. And what's happened is that the GLD is trading now up 65 cents at 160.38, but it's broken the left side, right side. First important series of support levels, that's at 162.30. If it takes out yesterday's low of 158.39, there's a real good chance that it's going to go to the whole next support level, which would be between 155.58 and 153.61. That is going to be very critical. It goes even lower than that, but I just go step by step by step. Can there be a bounce? Absolutely. 162, the 162 area is the 200-period exponential moving average resistance. But I've got a peak F-top in the monthly chart. And that says, whoa, be careful. Because within that context, I love to look at all the time frames. You've got the weekly, which is broken down from a little mini dreaded H pattern. What's the dreaded H pattern? The CD introducing the ChapmanWave methodology has a whole thing on this particular pattern. I call it the dreaded H. This is a lowercase h, a double bottom formation that fails to hold. And that particular pattern is just one of the many, many techniques that I have in the CD introducing the ChapmanWave methodology. And that's the pattern that fails, and it keeps going down in these arch formations until eventually they can sometimes make an M formation, and that has another implication. Ironically, I have the Sears Holdings chart right here, trading at 115, having made a high of 163 or something like that. What's it trading at now? I missed it as a short this morning. I missed it by 30 cents, wanting to short SHLD. Horrible chart looking. It's at 40.92. I don't know how they're going to get out of the morass they're in. Now, I'm talking about this, but basically what I'm saying to you is that there's a special going on now. It's a double special. You can get 50% off my CD introducing the ChapmanWave methodology. It discusses these very things. I think I'll show the SLV chart when we get back, silver chart. And you can get 50% off, and I throw in my opening call. It's a $128 value for 1 month free. Fantastic deal. I'll talk about it when we get back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks, we're back. Basil Chapman, Dow's down 151 at 13,160. S&P 16 at 1427. The comp index is down 38 to 3,011. Gold is up 10 at 1656. Silver's up 45 cents at 30.13. You got platinum down 10. Copper is rallying, actually. It's at 357, up 3.45. I'm watching copper real closely. There are clues here coming up at certain levels. I'm going to be watching that. It's really important overall for the general world economy. Crude oil is at 89.30, and bonds are only up 30 ticks. I'm watching that very close. We'll go through it right now. Well, in a moment. Let me just show you the SLV. That's the Silver iShares Trust. Made a peak F-top. It made 3 of them. And actually, as I was saying, talking about the CD, I thought it was great value. We had Cobra in the Den pipe up immediately saying, great CD and worth full price. Well, it's not full price right now. It's a special going on because I'm such an advocate of the ChapmanWave in the sense that if you just add a couple of the features, if you just learn to visualize, this is not a chart. I was looking at charts earlier on that were shown. I think Tom, I think it was Tom was showing the chart. I immediately counted the peaks. And the peaks, there was a line, a straight line that was going up. It looked almost like an on-balance volume line. You count the peaks. It went to peak D, and whew, the price came back down. So this was very important about it. Look, the silver contract makes its low on the 28th of June. at 25.34. It goes to peak A, B, and that's a B minus because it pulls back and starts a brand new A there. Starts a move and goes A, B, C to D. D at 27.48 on the 10th of August pulls back. It then starts a rally, and because the MACD, I'll teach you how to use the fast-moving average of the MACD, because the MACD was holding well. It goes to an E and an F, gets a down arrow, and it only lasts for 3 or 4 bars as the 200-period moving average. I do not talk about the 9 and the 200-period moving averages on the CD. I do it all the time here, and I do it in a webinar, a special webinar devoted entirely to the moving averages, which included the MACD and the stochastic. I do talk about them as the MACD and stochastic. I give great details about the MACD and stochastic and how you can use them. So now look at this. It holds, and that's the green line is the 200-period moving average. The first time you bounce above it after being below for a long time, it's like you need this rest, puff, puff, and if it holds that line, it can start a brand new move, which it does. It goes peak A, B, C, D, E, makes the cup formation. What is the cup? Every single pattern. The Chapman wave is the waveform that never sleeps. A little like its owner, I guess. Look, that pattern there, the double top formation. That double top formation is right here, chapter 22. Tremendous detail on this. This is a pattern that can really look at that. It's the pattern. It's the exact same pattern here. Makes the cup formation. What's the problem? It then drops sharply. Well, look at this. It makes the cup formation, goes to E at 34.05, then it squeaks to a high peak F at 34.08. Look at the vertical line. You see that line? Look how bad the MACD is in the stochastic. Well, good if you were short, but I'm just talking about the patterns. And look what happens. It goes trough A, trough B, trough C, trough D, trough E, missing over there, trough E, and then trough F. There's trough F. Right there at 29.84. But look, you've also got this arch pattern. Arch pattern was very successful. It didn't take out the left side low of 29.28. What is the arch formation? You go to your CD and you say, okay, CD, this is something called an arch formation or inverted cup. Oh, absolutely. The arch formation, chapter 13, if I can find it here, chapter 13, right there. It says, this is the pattern you want to look for there. You see that pattern? And there's something that I call the inside wedge, and it gives you the left side, right side time price match, preferably using the plumb line, that vertical line that says there's a measured move from the top to the bottom. Remember, I like to say that unless it's crash mode, most of the time rallies go to a top and come back to the same level in an orderly fashion. And that's the cup formation. They go from the top to the bottom, and then the bottom to the top in an orderly fashion. It's only in crash mode that you just wipe out bars and bars and bars to the left side. And that's what we had last night, crash mode in the S&P, if you were looking at a shorter time frame. So what does this mean? It says, ha-ha, you're coming down, but there was a successful test at 29.84. You can have another buy mode, because look at the green line, the way it helped, the 200-period moving average. Look at the beautiful divergence between the price coming down and the stochastic rally. It goes peak A, B, C, D, E, and then goes to F. There was just a moment of a parallel wave count, and look at that. On the 29th of November, it makes a top, and it comes down and it breaks the left side low, that cup formation. What does the 120-minute chart say? I haven't looked at this for a little while. Oh my God. This is the day that Ari called in, and we were looking at this chart together. I'll be right back. Basil Chapman, be back straight away with Mark in Fort Collins.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back. Basil Chapman, Tacticians. Dow's down 154, S&P's down 17. Just going to quickly finish this silver chart and then going straight away to Mark. I just wanted to say that the 120-minute chart made a low, and it went to one of the reasons why I felt that I had to still consider that it was much more likely to be a peak F top than a recycled B, was that the 120-minute chart was starting to fail, and you can see that it's failing right here. It made an arch formation, left side, right side, price time match, had a little mini peak D, and it's pulled back. Now the silver can bounce. I just consider that it can bounce. I don't think it's going to go much more than to 29.39 to maybe 30.20. That's the way I'm looking at it right now. I might change that, but regardless, the monthly chart, the weekly chart is saying consider it only a bounce at this particular time. 30.76 is strong. 200 period exponential moving averages, moving average. The monthly chart says the tide is down, and that's all I'm looking at. The major tide is down, and the weekly chart is making the pattern that I call the M. You remember I was talking about the H that goes to an M pattern? That's what I'm seeing there. So now we're going to go to Mark in Fort Collins. Hi, Mark. How are you?
Good, Basil. How are you?
Very well, thank you.
So I was in BSX.
Yes.
I got in at, the price of $565.
Okay.
And this morning I got a little nervous, so I put in a limit order at $572 to get out. And
they took you out.
Billed me at $579. which was amazing because that's the high of the day.
579, and
Yeah.
did you have a limit order?
Yeah, a limit of 572 to sell all my
Now
shares.
but it opened at 578, so that's
I don't know what happened. I checked my order and it filled at 579. So
that I
did it 5 minutes before the market opened, and I don't think it trades. I don't think my.
Oh, what a pity. Okay, let me see. I don't know if I don't think I can do it now to go back to see. Let me see. BSX. I'm not sure I'm going to have enough data. I could put it in. I just don't know if I can do it right. Now, let me just see. Opening price, 11.27. All right. So that's water over the dam. I'm a little surprised that they did that because
I put in
you had a limit order in, and it closed yesterday at 5. It closed at 581. So even a gap down doesn't allow them to fill you at an order that you did not specify, because that's a limit order.
Yeah, it was weird.
All right. You know what? I'm going to make a suggestion. It's just worth being upfront about it. I would call them up and discuss it with them and say that you know that you would have been filled at the price that you wanted. Why were you filled at this particular price? Because there's no data. I didn't see it beforehand. I didn't see it beforehand go to that level in the pre-market, but I wasn't watching it all the time, but I had my eye on it. You know what? Let me do this. At the next break, if I get a chance, at the next break, I will try to see if I can go through to the beginning of the trade prior to the opening. I'll see if I can do that. I don't know if I can do it right now, and I don't want to mess up.
It was interesting because I put it in to sell at 572 or better, I think, for 1,000 shares, and it must have opened a lot closer to that higher number because that's what I got. So.
I would still just ask them. I don't know if it'll change anything. It's worth asking them. Now,
well, I'm glad I got it.
Yeah, you made a profit.
Yeah, I mean, I got out at the high of the day. I made a profit. Now it's down 8 or 9 cents. My question was, is there a good time to get back in this, or should I just lay off for a while?
Oh, wait a minute. Of course, what am I thinking here? It was to your benefit. I'm saying to myself, wait a minute, suddenly I've got this whole thing wrong. People don't usually call in to say that it worked in their favor. Right. No, don't even call them. That's fantastic. You got a great deal. What was I thinking there? Okay. So you know what I'm looking at? You see, the reason why I've wanted, folks, in my opening call, we actually have Boston Scientific. We have it from lower down. Now, what's really important about this particular stock is that it's just been a horrible, horrible, horrible stock. It's just from their peak D-top at 46.10 back in April of 2004, it just did nothing. Every action that they did, every lawsuit, you name anything that could go wrong. And I'm terribly upset about this because I don't know what his position is anymore. But the CEO was a great benefactor of the New England Conservatory of Music, of which I'm an alumni. So I would like the stock to be back at 46 because I'm sure it already helped the conservatory. However, what we're looking at is a series of H patterns, but they're getting smaller and smaller, and the lows on a percentage basis are lousy, 541 to 504 to 501 to 497. But in the big scale of things, it's nothing. It's within a point. So what I'm looking at is I believe that their final thing, they've got a new CEO, they've done a bunch of things. I'm trying my very best to treat this as if it's a fundamental stock because it's turned the corner. I don't know what else can go bad other than they just don't get the sales. But they have new products. They have things already looking better. That's got nothing to do with whether they're able to implement their business program. But when I'm looking at the stock, I'm seeing slightly higher levels in the weekly chart, improving every time it comes down, and the monthly chart is still looking as if there's a cumulative effect that says that at some point, if it can hold, even if our stock gets taken out, if this thing can hold about 5, if there's more turmoil to come, and I suspect that this is going to kind of bypass the turmoil to a certain extent because it's already a has-been. Nobody's even really looking at it. So my suspicion is that if it can hold about 564, which is the 200-period exponential moving average right now, on the daily, if it can hold there, there's a chance that you'd look around in about 3 in about, let's say, 6 weeks to 8 weeks' time, very quietly, it could be at 623 to 6. At the moment it gets into the 620s, I think there's a chance to test the 641 level, and then it could start a very nice recovery. I'm not prepared to gamble. I'm prepared to say that my stop is placed. If it takes it out, I'll resettle, I'll wait, and I'll try to get back in. I do believe that the fundamentals have improved enough that it could, based on the chart pattern, the H pattern that's become an M pattern, and is starting to walk the 9-period moving average to the upside in the weekly chart, I think it could become a very nice position play. To just, this is not a Rip Van Winkle buy and hold. I would like it to be, but I would say if you put a stop in on the next entry point, then I think it could be. So you want to know where, I'm sure, where you'd like to get back in? I'm going to say
I already get in 8 cents below where I got out, and I just made 14 on it. So I was thinking maybe to, watch it to the end of the day here, and if it holds that 555.
It's just, I think that's a great trade per se as a trade. I'm just thinking that if I was to re-enter, that could be a part of your position because it made a peak C in the, oh, wait a minute. No, it didn't. It went 70, 80, 80, 80, 80, 80. Yes, those are all 80s. So it's in C in the 120-minute chart, which can fail because it's the smaller time frame. But I think you've got a nice entry, but what I'm going to make a suggestion here is that treat this as if it was a smaller part, so no matter how much you got back in, try to treat...
I haven't gotten back in. I'm just wondering if I should get back.
I thought you said you had. Okay, if you haven't got back in, I'm going to make the suggestion that you start a half a position of what you just got out of, or maybe even a third, and you put it in right back in where you got in before. And then, and then around about 568 to 562, preferably if you can get it in the 5. I would like it not to break 576 in the next 3 days, to tell you the truth. I think...
It's 571 right now.
Yeah, I think, you know what? You've got a great entry. Sometimes it's good to just step back. You either step back or you can start a 1/5 position right now to get back in at 571, 572, and just say, hey, now I'm really going to watch it. I own it. I can start to watch the little jiggles and jaggles. The 86% on the stochastic is great, but the MACD is turning down to say, just be careful, because it could come back quite quickly to the 564 area. So either just step back, say, look, I've got a great deal. The pattern that's forming right now is the rectangle pattern, and that pattern should work its way up to a peak D underneath or just above 586, the previous high at peak B. That's the way I'm looking at it. How you trade it, how you finesse it, I'm going to say maybe because I'm looking out further. I'm looking out into late January, February. I would like to be in the stock if it starts to break above 586. That's really my issue. So I hope that helps you, because I would suggest to you maybe just a nibble back in right now, not the whole thing, just a nibble back in, and knowing that it's going to probably be pulled back if the market comes back to maybe the 564 area, and that's where you make your decisions. Let's see how it holds the 564 200-period exponential moving average. But I think that that was a great trade. So I would suggest, think about it. You don't have to rush to do it, but just add a little bit right now to get back in, to have your foot in the door, because it makes you follow it far more intensely than if on paper you were just watching it.
Sounds good. Thank you.
Thank you very much for calling. Hey, congratulations. That was terrific. Let's go to Mike in Ormond Beach, Florida. We're going to Mike right now. Yes. Hi, Mike. How are you doing?
Great, Basil. I want to wish you and all the TFNN technicians Merry Christmas, a Happy New Year, and most importantly, thanks for all that you do to educate us.
Thank you very much. It's just right back to you and to all the other listeners at TFNN. Without you, obviously, we would not be here. So thank you very much. Thank you for participating here at TFNN. And just have a wonderful Christmas, and certainly a fantastic, healthy, happy, and prosperous New Year to everyone involved. Thank you.
And Basil, one other thing, I'd like to thank you also for saying the date ahead of your shows. It's very important to me.
I've had that from a number of people. They all say, gee, thanks for telling us, re-articulating the symbol you're watching and for mentioning the date. And, I like it the same way when I'm listening to archives and anything. I like to know exactly the date. Thank you. Yes.
Great. Well, I had been slowly scaling into the DXD, and, with what happened today, I want your opinion of how I should maintain my trade. I've got, 4 different positions I've been scaling in for the last week and a half. And,
okay. So, folks, let's look at this. The DXD, and just in terms of being clear about things, my subscribers are in the DXD. We're in at 46.19. That was on the 19th we got in, and it's trading now at 47.77. Not a big deal, but nice. It gives us a bit of a cushion. Now, I'm going to make this real clear. The volatility index, the VIX index, skyrocketed from pretty much nothing the other day, down in the 1477 area to 19.54. Right now it's at 1954, and the high today is 1993. This is going to be the way that I would consider the market positions that you have. Now, in the DXD, what's very important to me at this particular time, the DXD is only in, this is the first leg A up. The other one aborted because it went below, and it went to 46.15. So what I'm looking at right now, this is new A. But that's not the real issue. The real issue is that the stochastic has been rising as the price came down, and the fast-moving average, the green line, is turning up. But until it decisively clears the slow-moving average, that's the red line right there for those of you looking at Tiger TV, until it does that, I can only say that this is the beginning of what might be a longer move to the upside. Now, I'm going to try to put the picture. I'm going to use you, if you don't mind.
Sure.
And I'm going to also ask Paul from Boston, who's waiting in line, who wants to look at a particular stock. If he can wait a little longer, I'd like to complete my whole thought here because it's part of what we're looking at. So, Paul, if you don't mind holding on, I'll get to you. I'd like to look at that stock as well. So this is very important for me. There are patterns that repeat over and over, and if you look at the breakout, the cup and ladle ChapmanWave breakout in the DXD from the 54.46 high of September the 4th down to the low of 45.19, the exact time price matched to the plumb line that I chose on a specific candle. That's the other way. You either get the low or you have to choose a specific candle. Went to exactly the breakout bar that's on the 7th. On the 9th it broke out. Was that the 8th or the 9th? On the 8th, it broke out. It went to a peak D, touched the 200-period exponential moving average, and then pulled back. But there's another chart pattern that I like to look at, and that is there a possible W, soft? I call it a soft W. It took me a long time until just a couple of years ago to realize that the W is really two U's put together. Double U. Jeez, sometimes I'm a little slow with these things. Well, that U-shaped pattern is turning out to be a potential, if the upside in the DXDs, the high of 47.92, made on the 14th of December, is taken out decisively, and it pulls back, and then a leg B starts. It could be A, but if a leg B starts and takes out 49.55, all of a sudden, we've got something completely different. We've got a Dow that is going to be pulling back very sharply towards 12,943, which is the 200-period exponential moving average. So I want you to cover that. I'm going to cover the VIX, and then I'll do it real quickly. I'll finish up looking at the chart that Paul wants to look at, and as soon as we get back, if you don't mind holding, I'll wrap up, and I'll give you all the levels that I'd be looking at as a DXD trade. Is that okay?
Thank you so much, Basil.
Thank you. I'll be right back with Mike.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back. Dow's down 168, S&P's down 19, and we're on with Mike in Ormond Beach. We're looking at the DXD, which is 200% short the Dow. Now, this is what I'm looking at. If the TLT at the end of the day closes towards the 122.50-ish area or higher, and if the volatility index closes at it's at 1957, if it closes at 19.80 or over 20, and if the dollar, which is lagging right now, it's just had the first decent move in the dollar for a while, if the dollar is closer to the 79.80 area and the market closes, the Dow is closer to 200 or more down, and the S&P's as much down. What I would say to you is that you're in a great position, and one of your stops in the DXD could be raised, because the DXD will probably be at about 47.68. It's probably going to go to about 47.90. Then one of your stops should be raised to about, I'd say, the 47.20 area, 47.19 area, just in the shorter term. If next week, when we get back after Christmas, if on, is that Wednesday? Wednesday. Is Wednesday the next trading day? I'm mixed up in dates right now. If the first trading day of after Christmas, if there's the market is still very weak, then I believe you've got yourself a very nice core position, and I would use the one trading position that I just spoke about, 1917. I use about a 75-cent stop on that one trading position. Now, if by the end of the day, if the market suddenly turns around, you're down only 120 points, the S&P's come back to minus 10 or minus 12, and the volatility index has pulled back all the way to VIX.X, has pulled back to about $18.60 or something like that, I would say to you that the one position that you have, that's the one that you want to maybe take a little bit off, but just a little bit off. I suspect that this is going to be serious stuff going on. The market is saying right now, this could be serious stuff. Therefore, I think you're in a great position. So what I would use, those are the parameters. We won't be here Monday. I'll be back on Tuesday. I'll be back on Wednesday, and we will talk about the other positions as you move on. But I think you're in a fabulous position, but I would treat one as a trading position. I hope that helps you.
Yes, it does, Basil. And correct me, so we are in a confirm. We made a confirmed peak F in the daily.
We've got a peak F in the daily, unless something spectacular happens at the end of the day. But I can't say it's a confirmed. I have put the down arrow in, but until the MACD crosses negative, there certainly could be bounces. But the pattern itself says be careful, because of I'm looking at the pattern that I call the ChapmanWave stalk leg. If we close underneath 13,118, or just go under that, that cancels any chance of the upside for at least the moment.
Okay, so that pretty much confirms the peak.
That would confirm it. Close under 13,118, and I'd say peak F for sure. Hope that helps you. Have a great holiday. Thanks so much for calling. Let's go to Paul in Boston. Hi, Paul. You want to look at Krispy Kreme, is that correct?
Yes.
Do you have a position?
A small position that I took a couple months ago.
You took the position and then it spiked higher, correct?
Yes.
Okay. As it stands right now at $9.39 is the pattern that I call the rectangle formation. I won't have time to do it now. All I'm going to say to you is stay in this position. It's looking very good right now. The weekly is in leg F with a time price match, which says that somewhere around the week of the first week of January, it should try to retest the 10.08 area. But I like what I'm seeing just on the shorter term. So that helps me look at the weekly chart. So stay in your position. And let's see how it is on Wednesday, because this could be forming a rectangle pattern.
The market open Monday?
The market is open Monday, but we won't be here Monday. So I'm going to say to you on your short-term position, make a stop at $8.99 should be a stop on that small position. I like the way it's acting right now. I think you got yourself a nice trade. Something's going on there. Have a fantastic Christmas. Have a fantastic Christmas, and yes, I'll hold it for now, and I'll see you back here on Wednesday.